Welcome back. Now we're in the fourth quarter of 2025 when I'm recording this video, and we are getting now from some of the large firms like New York Dig warnings about the downward spiral in the digital asset treasury sector, something we've been talking about on this channel for quite a while. And in today's video, we're going to be exploring where we are in this cycle, where we're going, and how we can prepare by understanding what is going on in the crypto space, what is going on in the Bitcoin halving cycle, and why the market is not performing the way that many people expected it or thought that it would. But you guys have to remember, we trade the market in front of us, not the market that we want. And much of the rest of crypto is trading the market that they want, the market that they expect, or thinking that this is the previous cycle by continuing to say, oh, but in the previous cycle, this happened. Oh, well, based on the previous cycle, well, guys, we are not in the previous cycle. We're now in this cycle. And based on the halving chart, which I've been showing you, you can go on X to the Bitcoin halving tracker. And you can see that the current trend where we're at is very similar, just with diminishing returns. As we've said, every single cycle we've had diminishing returns. Meanwhile, the Bitcoin bulls say, but Cryptoviser, BlackRock is buying, MicroStrategy is buying. There is no more diminishing returns. Well, that's not what the data shows. And the data is also showing not only are we having diminishing returns and we're very similar in the trend of how the chart looks, but we are now at the 550-day mark, which in the previous two cycles, 2017 and 2021, did mark the historical tops of the Bitcoin and crypto prices based on days since the halving. And so we're going to be exploring what's going on with Quant, what's going on with CZ, Aster, the new hyperliquidation. We're also going to be talking about the digital asset treasury companies and much more, because a lot of this is not just happening in the crypto space. A lot of it also is happening in the traditional stock market. So let's get right into it. Don't forget to give this video a free thumbs up. We upload every single day to bring you the latest happening in the financial world. Sometimes we do deep dives into individual topics or cryptos or assets, and sometimes we just talk about the macro global economic picture, like what we're going to be doing in today's video. So give the video a thumbs up, hit the subscribe button. Let's get right into it. Now, not everything is all doom and gloom. There's a lot of positive sentiment that's going on. The CEO of the Quant Network posted this saying, I'm delighted to announce that the Quant Network, which is a blockchain and crypto infrastructure provider for, they call themselves the infrastructure of money, building on Overledger, they've been selected to create the new payment infrastructure and bank technology of the UK's tokenized sterling deposits, a groundbreaking financial product infrastructure initiative led by the UK Finance in collaboration with major commercial banks, including Lloyds, Barclays, HSBC, NatWest, Santander, and Nationwide. He said our technology with Quant has been chosen for its proven capabilities in interconnecting and interoperating diverse systems and enabling programmability across different forms of money, building on the successful delivery during the initial experimental phase. This milestone goes beyond improving payments. It's about enabling new forms of programmable money that will fundamentally transform how value is moved and managed. And so this is pretty interesting for the Quant ecosystem. It's also interesting that we're continuing to see that governments are getting involved, the banks are getting involved. And I think the most important thing to keep in mind is they're getting involved with the ecosystems that do have high interoperability, that do have proven results. There's a lot of ecosystems out here and a lot of bulls that have been holding since the last cycle. A lot of YouTubers, by the way, they're still holding the same coins that underperformed this entire cycle so far, the last 4 or 5 years. They're still holding on to it, saying, but we're going to hit the new all-time high just one more week, one more month, and it's not happening. And the reason it's not happening is because they're not getting selected for projects like this. They're not focusing on projects like this. They're not looking at sustainable use cases of the technology. They're just looking for price go up. And that's what we're going to be talking about in a little bit with these digital asset treasury companies, because a lot of people are stuck in this same mindset, whether it's in crypto, whether it's in specific cryptos, whether it's in the digital asset treasury companies or in stocks. They're like, but Cryptoviser, it's going to go up. You just have to give it. We're not in the bull run yet. The bull run, it's like, no, guys, we're in the bull run. All the money has been flowing in. All of Wall Street and all of the governments and all of the banks have already chosen what projects they're going to use, such as Chainlink. But Cryptoviser, everybody wants to use Cardano. No, nobody's using Cardano. They're using Chainlink because Chainlink is highly interoperable. Oh, but Cryptoviser stablecoins are not needed. They're all using stablecoins. And that brings us to Jeremy Allaire, the CEO and founder of Circle, USDC's company that is behind the USDC platform. Now, we've recently covered this whole conversation that's been coming up about reversible payments. And in my view, it really is a non-issue. But obviously, the crypto sector likes to say, crypto is supposed to be completely decentralized. There can't be refunds. It's like, what? If you think that any a stable coin cannot be stable if there's no mechanism to correct when there is issues. Look at Terra Luna, right? This was going to be the grand stable coin ecosystem in the world, until it was manipulated, and because it was decentralized, they couldn't recover it. And then they tried to recover by buying more Terra Luna, and then everything collapsed. Everything collapsed. And if you guys think that these crypto prices are going to go up because these companies are adopting the technology and they're going to be utilizing all of these, and they're going to be using these stable coins to help push digital payments, and this is going to help the prices go up, but they're not going to have any mechanism to correct or recover funds that are stolen or hacked, you're out of your freaking mind. And you literally don't know what the hell is going on in the financial world. And you should probably just step away from the investing space. Because one of the things that we do on this channel is analyze, like, what is more likely. I mean, we talked about this literally years ago with one specific project that still to this day refuses to have any stable coins because they're going to have a stable coin that's going to be better than everything. There's going to be no reversibility possible, which is completely ridiculous. I'm not putting my money into a stable coin. I'm going to hold dollars versus put it into a stable coin that I don't know who is managing it. I don't know who's behind it. Is it regulated or not regulated? Can they get me my money back if it gets stolen or not? I'm not doing that. The banks are not doing that. And you shouldn't do that either. But there's ecosystems in crypto out here that think that, oh no, we can't have reversible payments. We can't have refunds. It's like, what? If you can't do that, then you don't have an actual sound money system, because then you're going to have thieves stealing your money and then going and spending it, and then it's just going to be all theft. Anyway, Jeremy Allaire on this whole reversible payment thing. By the way, again, I thought this was a non-issue, but apparently the rest of crypto thinks this is like, wait, you think you're selling us stable coins are going to be able to get frozen? It's like, yeah, they've been doing this forever. Like Circle and Tether both freeze money on their chain and sometimes just reissue that money back to where it was from and where it should be. And nobody had any issues. But now that they're reporting that they're looking in reversible payments, all of a sudden, oh, well, this is not decentralized. It's like, these kind of like, I don't know, commentators, they're ridiculous, right? This is why we try to keep it real on this channel and show you like where this is going. I do think that reversible payments and refunds are important, especially in the stablecoin space. Otherwise, there's no trust, even in a trustless system. So Jeremy Allaire said this. He said, I love it when journalists do reporting and actually don't even do any remedial research on what they're saying or writing about. On USDC and reversible payments, we've been working on research into how to enable refunds on top of blockchains that settle stablecoins with finality for a long time, as we announced last year. He posted a blog with that. He said, even a cursory review of the ARC Light paper, which they published in August, speaks directly to this work. It says refund and dispute protocols, on-chain mechanisms for managing refunds and resolving payment disputes. This provides a level of consumer and merchant protection that is essential for mainstream adoption, but often lacking in existing blockchain systems. I would agree. He said, we also talked about it as a key feature for future upgrades to Circle Payment Network for on-chain payment protocols. Most importantly, with ARC, we are delivering sub-second deterministic settlement finality as a foundational principle and feature. If you're a journalist, do the work and don't just spew clickbait. But again, there has to be reversible payments. There have to be refunds. Otherwise, everybody loses, except for the bad players. And that brings us to CZ. Now, CZ, you guys know, founder of Binance, right? Big crypto bull. And what we've been talking about recently is Aster, which is the new basically hyper liquid. It's just a perpetual futures DEX, right? It's a trading platform effectively. And we've been talking specifically about hyper liquid, and I've been telling my viewers for a long time, it's really hyper liquidation, like it's in the name, right? So the fact that hyper liquid is going to stay in the top 15 forever is ridiculous. This is just for trading in the market. But anyway, CZ wrote on X, weekend deprecating humor. Two new words I learned this week is disaster and also hyper liquidation. So that's pretty funny because, yeah, that's what we talk about on this channel, right? It's in the name, hyper liquidation. It's going to happen, and it is already happening in certain circumstances. Meanwhile, Binance has now joined an X space just recently to explain his role as an advisor to on Aster. So effectively, the perpetual DEX project Aster and its crew fired up a space where Binance founder Changpeng said, I hate these pop-ups. This is like, how do you even go to a website and you can't even read anything because everything is just an advertisement and a pop-up. Anyway, so CZ slid into the chat. He made it clear his gig with Aster is strictly advisory, nothing more, nothing less. He said, I only advise them on product and technology. I do not advise them on regulatory issues. That's not my scope. That's not my specialty. I'm not a lawyer. I've got some trouble before with that. I'm just helping them. He further clarified that Aster's team has Binance ties with former employees, noting that Aster has a couple of ex-Binance employees on the team, describing them as very good people who've stayed pretty close to the BNB chain ecosystem. He also called Aster a very strong project and pointed out that since BNB is close to his heart, the team's familiar bond with BNB ecosystems ends up giving his beloved token an indirect boost. And as you guys know, BNB has just recently passed the $1,000 threshold. But again, what part of the cycle are we in when they're launching a new perpetual DEX called Aster or Disaster? And hyper liquidation is also pretty big. This is the end stages of the cycle. It's just the end stages. I mean, we are past the euphoria phase. People are like, but Cryptoviser, I don't feel like we were in euphoria. It's like, just because you didn't feel it doesn't mean we weren't in it. Just because you bought over $110,000 doesn't mean that we have to go to $250,000. You bought the top of the market. So did many of these digital asset treasury companies. So did a lot of people within the Wall Street ecosystem. And that brings us to the digital asset treasury conversation. And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up, hit that subscribe button. That way you never miss a new video. You can also leave a super chat or super thanks down below in the comments if you want to help support the channel financially. So New York Dig, which is a big financial institution and crypto firm, I believe in New York. I think it's New York Digital Investment Group or something like that. Anyway, they've urged Bitcoin treasury firms to stop relying on the market net asset value or multiple of net asset value metric, the MNAV, arguing that it gives the false impression and heightens systemic dangers within the digital asset treasury industry. Well, something that we've been talking about all year is that the MNAV for these companies is the key to where you need to position your portfolio if you're investing in these. When there's a positive MNAV, you want to be bearish. And when there's a negative MNAV, you want to be bullish. This goes for any company that is holding an underlying asset, not just Bitcoin treasury companies. According to the New York Dig company analysis, MNAV, which measures the company's enterprise value against its crypto reserves, has become an unreliable gauge of stability, especially as increased market competition and investor weariness compress the ratio. New York Dig's global research head pointed out that shrinking difference between the share price and the crypto assets has made the sector more fragile, with investor concerns over token unlocks, changing corporate strategy direction, and a lack of unique treasury approaches all contributing to the downturn. And this maybe is part of the reason that MicroStrategy specifically, they went from providing guidance in July of 2025 that they're not going to sell any shares on the market when the MNAV is below 2.5 to just 3 weeks after that, saying, forget that, scrap that, we're going to sell at any valuation. And that's what they've been doing. That's literally what they've been doing. And as we are in the end stages of the cycle, as people are starting to exit their MicroStrategy positions, exit their crypto positions, because they realize that we were at the top and that we're at the top, right? And even if we go higher than where we are, $110,000, $125,000 Bitcoin price, even if we go to $200,000, the risk is not necessarily worth the reward at this point, like it was a year ago or 2 years ago. And this is the difference between bag holders and real investors. The people who are still in MicroStrategy today, they're bag holders, and they will continue to be bag holders as the MNAV continues to compress. Because all through September, the Bitcoin price has been wavering. MicroStrategy price has been going down, along with many of the digital asset treasury companies. I mean, just look at Nakamoto. And we're going to get to the Nakamoto in just a second here, but Nakamoto's down 95% or 90% in September alone. And from the time they made their announcement about Bitcoin treasury strategy in the middle of 2025 until October of 2025, they're down 95%. Think about that. 6 months now down 95%. On the 1 month down 95%. I have to take some coffee to think about this because it's crazy. And so MicroStrategy keeps selling, and the price has collapsed from $400, well, really more than $400, but just in the last couple of months, $400 down to $300. And it's going to keep compressing because this MNAV should be at 1 or below. People who are like, I mean, go to the irresponsibly long MSTR group on X. People are saying in there, MicroStrategy should be at a 3 MNAV, meaning the stock price is 3 times the value of the underlying assets, even though you as a shareholder of MicroStrategy are not first in line, second in line, third in line. You're last in line to get access to the Bitcoin in the case of a liquidation. And all these debt products that they continue to shill and sell. Number one, they're all losing value. And number two, MicroStrategy is on the hook for about $50 million per month in dividends. And the only way that they can make that $50 million to pay out dividends is by selling more MicroStrategy stock. What do we call that? Starts with a P. Anyway, previously, MNAV was a major incentive for digital asset treasury companies to issue new shares and grow their crypto portfolios, but it's now suffered considerable declines. Standard Chartered Bank noted that several prominent treasuries have fallen below the crucial MNAV level of 1, effectively stopping them from expanding their assets. This drop is largely due to the market saturation as strategies, Bitcoin acquisition thesis, inspired over 89 similar companies, many of which struggle to remain sustainable. The bank cautioned that the consolidation is unavoidable, with dominant players like Strategy and Bitmine expected to absorb weaker competitors trading at lower valuations. Something that we've also said. These companies that are not going to make it are going to be acquired at much lower discounts, or I should say higher discounts, to what they're paying now. So if we do, I mean, we are going into a bear market. But by the way, when all of these companies were announcing that they're converting to Bitcoin treasury companies, whether it was Nakamoto or whether it was Bitmine or SharpLink, that was the top. I mean, that was the effective top. Everything after that was just volatility. And you could see that in their stock prices. But people are still the most bullish they've ever been in the world right now, which is absolutely not how to invest. But like I said, there's going to be winners and losers in this market, right? We're about winning in this market. There's a lot of people who are, I mean, they don't understand investing. You cannot be married to your bag, because if you're married to your bag, good luck, right? Because we are at the end of the cycle. We are in the complacency phase. And what happens after complacency? Straight down. And so what is that going to mean for these digital asset treasury companies? Are they going to keep buying Bitcoin? Maybe. Are they going to go under? Maybe. I mean, even Anthony Pompliano's company, ProCap, right? They've purchased at literal all-time record highs. I think it was $110,000. Nakamoto, $110,000. I mean, they're all over $100,000 buy price. And so once we go below that $100,000 buy price in Bitcoin, which it will happen, it's going to happen, these companies are done. Like done, because they don't make any money otherwise. And so I think that we're going to see Strategy buying up some of these companies in much lower prices than they were. But who loses? You lose. The shareholder loses. Meanwhile, we just heard the other day that the SEC and FINRA have reached out to over 200 Treasury companies with concerns of insider trading of the Treasury vehicles pre-announcement. Meanwhile, Predator said that yellow line on this chart, May 12th of 2025, you guys can see it now. He said this represents the day Kindly MD, later rebranded to Nakamoto, first announced their Bitcoin treasury strategy to the public. 9 straight days of green candles before that announcement. He said that feels very insider to him. And it could be. I mean, we know that these early investors in the rebranded company, Nakamoto, they're called PIPE investors. I think it's private, I don't know what it's called, PIPE. Go look it up. It's basically you get equity for, helping fund the company or whatever. These PIPE investors got their unlock in mid-September, and we warned about this. And sure enough, what happened to the Nakamoto price? I mean, it literally down 95% since they made this announcement, and it's down 90% just in September alone. And that's because these insiders were selling. And this was later confirmed by the CEO of Nakamoto, David Bailey, on X. He said, we're watching the PIPE investments getting unlocked and being sold. It looks like it's slowing down or something like that. Basically confirming that early investors around here were selling as soon as their shares got unlocked. And so they sold then, probably bought in before. It's just really interesting to see how this is all playing out. And the idea that people think that none of this is actually going on. I mean, of course it is. Of course they're selling. Of course there's people exiting their positions because the big money knows that the market cycle is coming to an end. I mean, I showed you a video back, I think in July, of Saifedean Mahmoud, who's a well-known Bitcoin advocate and Bitcoin expert, on an interview with another Bitcoin supposed expert. And he was like, yeah, we're coming to the 18 months. This is probably the top of the market, or we're very, very close. And the interviewer was like, wait, based on the last cycle, we should be at $200,000. You don't think we're going to hit $200,000? And in my head, I'm like, no, we're not. Because you think that we are, and everybody else who is a quote expert thinks that we are. And Saifedean Mahmoud says, listen, I don't know what price we're going to, but I do know that 18 months after the Bitcoin halving is historically when the top of the market is. But everybody is expecting, Raoul Pal said banana zone. Raoul Pal said that we're going to have a banana zone, so we have to have it. Oh, MicroStrategies, Michael Saylor said that we're going to hit $1 million, so we have to hit it. It's like they can literally say whatever the fuck they want. It's whether you believe it or not, whether you do the research on your own. This is why we say do your own research, right? Don't believe what I'm telling you. Go to the Bitcoin halving tracker yourself and look at it. Go look at the psychology of market charts. Go look at MNAVs. Go look at grayscale products in the previous cycle when they were above MNAV and below MNAV. We were trading that. We were trading that arbitrage. So we have the experience to understand when it's above MNAV, it's going to compress to below MNAV. When it's above MNAV, you sell. When it's below MNAV, you buy. And when it goes back above, you sell. You arbitrage play that. We did that last cycle. Made a lot of money in the grayscale products doing that because there were no ETFs. There was just straight discounts and premiums to the MNAV. But people are like, no, Cryptoviser, you're just spreading FUD. You're just spreading FUD. It's like, okay, you can believe whatever the hell you want. But at the end of the day, it is what it is. Meanwhile, we are now also seeing issues or potential growth in the Ethereum treasury companies. So ETHZilla is now leaning into sticky restaking with EtherFi and Puffer Finance. Now, if you guys are not aware, ETHZilla is another publicly traded company. It's called ETHZilla. They have about 102,000 Ethereum on their balance sheet. And now ETHZilla is moving into DeFi. And basically, in September 2, ETHZilla said that it planned to deploy $100 million of Ethereum into EtherFi. And then they later announced that it would deploy about $47 million into Puffer Finance. For EtherFi, the pitch to institution is partly economic and partly behavioral, according to EtherFi's co-founder and CEO. The difference with digital asset treasury flows compared to the retail is their durability. He said, it's nice to have strong, it's nice to it's nice to have like this long-standing capital. Okay, some of the more conservative ones is their approach is this doesn't make any sense what he's saying, so we're going to pass and move on. Anyway, Puffer's tranche amounts to 10,000 Puffer ETH, according to a contributor. Puffer's Puff ETH is a yield-bearing token that accrues value over time. Beyond the baseline staking rewards, Puffer takes advantage of a combination of compounding and selling strategy of restaking rewards to maximize the returns on restaking. I still have no idea what the hell that means, but that's what they're doing. The digital asset treasury's goal is sleeves that are large enough to matter, but diversified enough to avoid concentration in operators or AVSs, and with predictable liquidity during stress. As for the details, ETHZilla leaves risk curation up to the service providers. He said, they've certainly asked questions, make sure that we're being reasonable about it, but no, they haven't gotten involved. This entire article makes absolutely no sense. This is from BlockFi. But the bottom line is that ETHZilla, I mean, this article is actually really bad. I am very surprised. This is probably written by AI because there's no author here. That is so lazy, this is Blockworks. That is so lazy. Go reread this. This article makes no sense. Okay, we're never using Blockworks again until they stop using AI to write their articles. But the bottom line is, this is happening, right? They're using restaking on EtherFi and Puffer Finance. Is this going to work out? I don't know. I mean, the idea behind these Ethereum treasury companies versus the Bitcoin treasury companies is the Ether ones they can actually make money on through staking. But once you start adding other DeFi products that are, I would say, untested, especially untested in a rotation phase from a bull market to a bear market, which I think that we're currently in that rotation phase right now, is it going to work? Because in the previous bull to bear market rotation, we saw a lot of collapses in DeFi. I mean, Terra Luna was the biggest one. Terra Luna and the Luna stablecoin. That was the biggest one. So hopefully this works out. It is very interesting, again, that ETHZilla is doing this, but Bitmine is not doing that, and SharpLink are not doing that. I think they're just using regular staking right now. In a bear market, they may start testing into DeFi because we'll probably already see all of the liquidations and collapses happen by that point, but it's very interesting to see that they're already getting involved in DeFi. And you can see here, ETHZilla, just like many of the other treasury companies, pump and then dump. And that middle of the year pump, that was the top of the market. Everybody is going to be chasing this. In Ethereum, in the treasury companies, in Bitcoin, everybody's chasing that top. But this top that you can see right here, we're not going to get back to that for many, many years. Many, many years. But again, I'm just fudding according to a lot of people, right? I'm still shocked that Blockworks used AI to write this, and it literally makes absolutely no sense. I don't even think that these are real quotes, because the quotes make no sense. It's nice to have like this long-standing capital. Some of the more conservative ones, their approach is, look, we're going to sell ETHFi immediately and compound it. What? Wow. Anyway, moving right along, and to show you that this is not just a rotation from bull market to bear market in crypto, but it's also occurring with stocks. And people are still chasing these all-time record highs, right? So a lot of people have been talking about this company called Open Door, which is effectively an Open Door Technologies is an online company that buys and sells real estate, headquartered in San Francisco. It's instant cash offers on homes through an online process, makes repairs on the property it purchases, and then relists them for sale. And you can see the 5-year chart. Everybody's chasing the 2021 highs of $35, but keep in mind, like the market was different then. 2021 rates were much lower. There was a lot of money flowing. A lot of people were buying and selling homes. Now we have a lot of people selling homes, not a lot of people buying homes, and rates are much higher than they were. Now they are coming down, but not by much, right? And so we just look at the last year, look at what happened to Open Door. We went from a low of about 50 cents to a high of about $11. It's a 22x, 2200% increase. This user, Brandon, who's a founder of Aspire Commercial, a commercial real estate brokerage and company, a property management firm, he posted this and said, "This is one of the dumbest things I've ever read. The CEO of a real estate company with a business model that never had any chance of working is telling employees to become AI native, as if becoming AI native will somehow make buying houses for too much and selling them for too little a profitable business. AI is quickly turning into a buzzword people throw around to feel better about being lazy and doing nothing." He said, "If I traded stocks, I'd be backing up the truck to short Open Door." Now, this is in response to the CEO of Open Door posting this, saying, "I sent this note to our entire team in the end of September. It says, 'This is day 11 for me at Open Door.'" I guess he's the new CEO. "Thank you so much, yada, yada." He said, "Over the next month, the hardest thing we need to do as a company is to become AI native incredibly quickly. Our job at Open Door is to build the best platform possible to make selling, buying, and owning a home as delightful as possible." Interesting terminology there. Anyway, that's the mission, and it matters because home ownership matters. Every week we don't make immense progress against this mission is a bad week for the world. The world is objectively worse, and families are worse off if we don't make an insane amount of progress every single week. So we need to move faster, always. And we can't do that without being AI obsessed. So starting today, for the first time in everyone's job expectations, is simply this: default to AI. Okay, so for what? Like, what is AI going to do? Like, if somebody can't afford a home, what is AI going to do? It's going to say, "Oh, well, you can buy this home that needs, $300,000 in work, and then you could buy that." It's like, what? Like, the rates need to come down. The inflation over the last few years has obliterated a lot of people, right? Because if they were saving, maybe they had to tap into their savings to pay for eggs and groceries and gas and repair bills or medical bills or whatever the other situations that they have in life are, right? This is multifaceted. And the other issue is that the boomer generation is moving on, retiring, going to other types of communities, and their families want to get rid of the home, but their real estate agents saying, "Oh, well, the comps in the area have been selling for $1.2 million." And they're like, "Well, let's list it for $1.2 million." And then you're like, "Yeah, but the home inside it was built in the 1970s and it has never been updated since the 1970s. You still have the same cabinets, same color, same wallpaper, same carpeting. Everything's the same inside the home from the 1970s. So the home is not worth $1.2 million. But either the boomers or the boomers' family, they're like, no, it's worth $1.2 million. We're going to keep it on the market until $1.2 million. And then all these other homes go on the market and they're selling for less. And then it becomes a spiral. The same thing that we're going to be seeing with these Bitcoin treasury companies. And so Open Door buying homes and then selling them. I mean, there's so much competition in the real estate space. You guys have to realize that. So the fixer-uppers, you're competing against other companies and other individuals who are trying to buy fixer-uppers and flip them as well. And a lot of these flips are not working out. So yeah, going to AI native, what does that mean? And I do agree with what Brandon is saying here, that the AI native terminology is becoming a buzzword. And that is an indicator, top of the market, right? Because keep in mind, OpenAI, XAI, Google's Gemini, they still haven't figured out how to make money. And so these AI companies, they're spending a lot of money, but they're not making any money. And so it is becoming very similar to what we are seeing with, all of these digital asset treasury companies like Kindly MD, right? This is not the only one. There's several companies that were medical or pharmaceutical companies. And because the pharmaceutical industry is kind of waning down a little bit and consolidating, they're like, well, what else do we do? How do we save our company? How do we save our stock price? Let's start buying crypto. And now they're getting into crypto because that's the buzzword of the day. And so now companies are getting into AI because that's the buzzword of the day. Same thing happened in 2017. Long Island Iced Tea Company rebranded to Long Island Blockchain Company. Even in the last cycle, Facebook rebranded to Meta for the metaverse. They've spent tens of billions of dollars and we still have no metaverse. No metaverse. So this, I agree. I think that getting into AI, this is just a way to pump the stock. I mean, it's working so far, right? We're seeing moves to the upside, an open door, but the housing industry is not being, it's not getting better at any point. I mean, and there's a lot of experts in the real estate field that I'm listening to that are believe that the prices are coming down. They're going to come down because everybody thinks just because rates are going to get lower, the Federal Reserve is going to lower rates, all of a sudden people are going to be able to afford a home. It's like, if you couldn't afford the home when rates were higher, you're still not able to afford the home when rates are lower. The prices need to move. But in fact, what you're seeing is prices are not moving, or they're moving in the upward direction as rates come down, because people think, oh, well, now people are ready to buy because rates are coming down. It's like, no, the price needs to be right. So he continued, Brandon, in a separate tweet. He said, it's stunning how delusional people are about AI. Opendoor was founded in 2014 at the start of the biggest bull run in U.S. housing history. They couldn't make money in the best market in history for their business. At its peak in 2021, Opendoor's market cap topped $25 billion, although the business never generated a profit. By July 2025, it was worth $400 million, a 98% drop. It's now turned into a meme stock. The fundamentals didn't change. The company lost over $2.5 billion since going public. But a new CEO comes in, tells their employees to be AI native, basically use ChatGPT instead of Google Sheets. And the meme stock crowd thinks the business model is going to magically start working. AI is a huge technological breakthrough. It'll change a lot over time, he says, but it won't turn a bad business into a good one. I completely agree with that. He says, nor will it enable tech guys that know little about real estate to beat actual real estate investors at their own game. He said, I've talked to my financial advisor today about shorting the stock. He said we could, but the risk reward isn't there because so many people are already shorting it. Said differently, smart money already knows this is going to zero and have wagered so heavy against it that it's not wise to do the same right now. Very interesting. He said, and the only reason it's gone up is because the meme stock crowd, people in the comments of his posts, have been short squeezing, again, like GameStop and AMC back in the day. And what happened to those stocks? They never recovered. I'll be sticking with commercial real estate. I wish Opendoor fans the best, but the business has never worked and never will. Interesting. Now, here's the deal. I would agree. You know, we have been talking about the top of the market literally since June and July of 2025. And that's when I called the top. And people are still to this day saying, Cryptoviser, you were wrong. We're not at the top. I'm like, you're missing the point. The top is not one day. The top is not 1 week. The top is a phase of the cycle. And it could last 6 months. It could last 3 or 4 months. But the point is, the smart money, they get the out way before the people who are so bullish. When I saw Anthony Pompliano's company, ProCap, he's a smart guy, smart investor. But if you remember in the last cycle, he was pumping BlockFi and had no idea that BlockFi was part of this whole borrowing and lending scheme that Celsius, Voyager, 3 Hours Capital, Terra Luna, and FTX were involved in. And what happened to BlockFi? Everybody lost their money. It collapsed. And now he's starting a digital asset treasury company. By the way, they say don't never sell your Bitcoin. That's what they're doing to get into this digital asset treasury company. And they're buying the top of the market. All of these digital asset treasury companies are doing it. None of them make any money. And so what's going to happen in a bear market? They are going to collapse. There is no alternative. And so the smart money is ahead of that. Jim Chanos started shorting MicroStrategy around the time that I called the top of the market. MicroStrategy is down over 20% since he started shorting the stock. Bitcoin is up. Think about that. MicroStrategy is down over 20%, and Bitcoin is up since Jim Chanos started shorting it. Because he's literally doing the same thing MicroStrategy is doing. They're shorting their own stock to buy the Bitcoin, and that's what he's doing, at least in the trade. And so the smart money, I'm telling you guys, the smart money, many of you are in that smart money category, out of the market. Because once we go over this complacency cliff here in the psychology of market charts, once we start turning over that cliff, that's it. That is it. I mean, anybody who has been buying anything over the last couple of months is in very risky territory because we may never reach these highs again or for a very long time. I remember when these Ethereum treasury companies started popping up, everyone's like, buy Ethereum, buy Ethereum. I'm like, well, hold on. And around that time, I got out of Ethereum because I'm like, no. Like, everyone's anticipating we're going to hit 20,000 Ethereum. These companies are buying, and Ethereum price hasn't even gone up. And then I see posts, people say, another Ethereum company just bought Ethereum. This pump is going to be crazy. I'm like, but they already bought it. The pump should happen while they're buying it, but they're not. The pump is not happening. Why? Well, they're doing it through private sales. They're not even doing it on the open market. It's just a transfer from one wallet to another. The smart money know this. The smart money are ahead. And you can clearly see here, he wants to short Open Door. But what they're saying is everybody else is already shorting it. So who's not shorting it? Well, the meme stock crew. They're like, we'll short squeeze this up. I mean, it's already up 22x. Could it go another 22x? Sure. But the likelihood now is that we are going lower. And this is going to happen in many of these assets. And that's why it's really important that you understand the psychology of market charts. And I'm not telling you what to believe or what to do in your portfolio. If you don't think that we're at the complacency phase, let me know in the comments down below, what phase of the market do you think we're in? Because this is not like, nobody's going to announce. Raoul Pal is not going to come out and say, hey guys, we are now in euphoria. Now is the time to sell. He's going to keep leading you on, telling you, oh, by Q2, we're going to hit the top of the market. No. By Q2 of 2026, we're going to be at the bottom of the market. And the people who believe that we're going to be at the top, they're going to have no money to invest, and all of their investments are going to be underwater. You and I, we're going to have a lot of money to invest. And our investments will not be underwater because we're watching what's going on. The Federal Reserve is barely cutting rates. And by the way, rate cuts don't mean money printing. We need to see money printing. And this whole government shutdown situation is part of the money printing, right? And once they agree on something, whether it's now in 6 months, next year, sometime, whatever, once they make the agreement and they pass the budget, then they have to print the money and then they have to distribute the money. And so from the time that they make the agreement to the time the money hits the economy is at least a 6 to 8 month lag. And so that's really the time that we have to look for, because that 6 to 8 month lag, you'll start to see the asset prices going higher after they make the agreement on whatever the budget is going to be, because that's going to be what the money printing looks like. The higher the amount of the money printing, the higher the markets will go. But I think that this is like end of 2026 into 2027 timeframe. And we'll have to wait and see. Let me know what you guys think about all of this. Let me know where you guys think we are in the cycle, where you are on these Ethereum and Bitcoin treasury companies, on Aster and hyper liquidation, and also Open Door. Are you trading that or are you not? Let me know down below in the comments. Don't forget to give the video a thumbs up, hit that subscribe button. That way you never miss a new video. And I'll see you on the next video, which is, I got a lot of videos on my channel, so go check it out. Crypto On.